Hello, everyone. My name is Courtney Pollock, and I'm the Marketing Coordinator for SWK Technologies. I'd like to welcome you to our webinar, What's New with Tax Compliance in 2022, presented by Brian Gavin and Cameron Murphy from Avalara. Before we get started, let's go over some housekeeping items. Everyone has been placed on mute to keep the background noise to a minimum. However, throughout the webinar, you can submit any questions you have. If you'd like to submit a question, look for the question section in your GoToWebinar, and we will answer all your questions at the end of the presentation. We're also recording this presentation, and it will be distributed tomorrow to all attendees, as well as those who registered but were unable to attend. And finally, we would appreciate your participation in our closing survey. With that said, we appreciate everyone taking the time out of their busy day to attend this webinar. We're here to help you get the most out of your software solutions, help you find an easier way to run your business, by providing you with tools, support, software, and industry knowledge whenever you need it. We've invited Avalara here today because they're tax experts, so we hope you find some valuable information on what's new with taxes in 2022. So whether you're here just researching a new solution or you're here to learn, we'd like to encourage you to ask any questions you have. And lastly, as a quick reminder, SWK is constantly sharing important updates and software tips and tricks on our social media channels. We encourage you to follow us on Twitter, LinkedIn, Facebook, and subscribe to our YouTube channel where we will host our recorded webinars. With that said, I'm going to hand it over to Brian and Cameron.
Thank you so much, everyone, for joining. Brian, are you there? All right. We want to go over what's new with tax compliance today, and Courtney and the group at SWK, thank you so much. And for everyone that's on as well, thank you for your time today. We're going to go over some tips and tricks and really kind of what is new with the tax compliance for this year, especially in the second half. So we appreciate all of you joining. Brian, if you're there, would you like to give the group a quick rundown of who you are? All right.
I think we might be having some audio issues with Brian right now, so I'll work to.
Yeah, I'll go ahead and I'll fill that in for him. He'll be joining us shortly. So Brian is a sales executive on our Sage team at Avalara. He's been with us for a little over a year, and he comes with a pretty extensive background in tax from ADP. And he is one of the leaders on the team as far as connecting folks, customers with Avalara and getting them in a compliant business. And he's also a girl dad. Which I think is great. My name is Cameron. I am a Senior Strategic Alliance Manager at Avalara, and I've been with the Orange with Avalara for over 5 years. I'm originally from Southern California. I was a ball boy for the Rams. I'm allergic to chocolate, and all of my kids are left-handed. I did not influence them at all. I also focus on our top strategic partners, specifically for Sage Intacct, Sage, and Acumatica. Today we're going to go.
Can you hear me now?
Yeah, gotcha.
I'm sorry about that. It worked on the test run.
That's all right.
Sorry about that, everyone. I appreciate.
Went over who you are. If you want to add anything else, I'll let you go ahead and take control.
No, it's good. Hopefully you did a good job introducing me. We keep rolling on. Sorry about that, everyone.
That's all right. Do you want to go over our agenda? Then I'll get into kind of the state of commerce.
Absolutely. So again, appreciate everybody hopping on today. You know, we want this to be kind of informal, and you know, we'll kind of go over the slide decks, but the best is kind of any Q&A at the end. Please feel free to ask. But you know, as Cameron mentioned, we're going to start off with the current state of commerce and really share with you guys some of the topics that have been top of mind with our customers and clients. The latest in Nexus, economic Nexus, I'll be going over that. Marketplace complexities, you know, with local jurisdictions and you know, just how the differentiators in different states, additional tax compliance complications that you might be facing or that you've, you know, decided to maybe take a look at or tackle, and then just different tips and best practices, how we can kind of really automate this process for you with compliance.
Excellent, excellent. So really to jump right in on the current state of commerce, and I know that this has been a really big spot for us, not only the last maybe 5 years, but within really the last couple years with the pandemic, just with the shift of really the traditional brick and mortar to more of a click and mortar, or really businesses wanting to have an online presence, being able to go through and collect orders and fulfill those just 24 hours a day, really all through the week and all through the month. Really seen an uptick or a big growth within the commerce space. And really, if we look at the state of that and kind of where things are at with in-source sales, I know for ourselves during the pandemic and really kind of the business climate currently as things have changed, we traditionally learned to just stay at home a little bit more and order things online or have them delivered or find other ways to get what we need. And businesses have really seen a tremendous growth and a big uptick in that piece of the business. Again, really just kind of the online sales. So if we look at those rising prices now of really the adjustment from less rigid pricing during the pandemic to some inflationary issues that are out there, some other items that are really driving up sales. It's been 22 months of consecutive online prices that have gone up. And we've seen from 2001 of this year, from January to March, Q1 of last year, you can see sales are up to 1.1 trillion, which is a really amazing amount of revenue that's coming from online sales for businesses. And just alone in this year, January, February, and March, those numbers accounted for 231 billion. And as you can see here, that really caused, if not almost all of businesses, to really shift their focus and the landscape going forward of how we're actually connecting with people, we're reaching out to them, we're giving them the goods and services that they need. And really a lot of that comes through automation and compliance as businesses grow and change, right? You just can't have one person, or you can't rely on doing that manual anymore. You need a solution set that can handle that in real time and get all of the information correct. So that's really where Avalara comes in. And in addition to really the online costs that are rising, how do we wrap our hands around some of the supply chain pieces when it comes to being compliant? Shipments not reaching port, we're drop shipping more. How do we manage the procurement of that and where things are going? And if we're specifically a business in Texas or in one state and we're shipping into 4 different states or 4 now, where traditionally we were in one state and people would drive to our locations and pick up goods and services that we provide, how do we now shift and wrap our hands around really all the different areas that we can reach people and that we're doing businesses? What items are taxable? Which ones do we have to put exemptions on the line item for SKUs on an invoice? If it's taxable, what rate? What different jurisdictions? How do we go ahead and really get a visibility into that and get efficient? And then if we are collecting monetary funds from that, revenue from that in those different states, where have we put in place triggers to actually collect and remit now and file and return to the different states and municipalities? So there's a lot of different obligations that are going on that are in regards to tax when it comes to products, different suppliers, where are we procuring, where are we actually sending and drop shipping? And then now we've collected this revenue, what do we need to remit and how do we get help with that? That's really where Avalara comes in to manage all of that. I think you can see from inflationary and just sales tax alone, consumer prices having grown almost to 10% or a tenth higher, and it's the largest since 1981. And so really, that doesn't seem to be slowing down. I think we all feel that, whether it's at the pump, it's a gallon of milk, it's an item that we have on the shelf or that we are fulfilling and sending back out and shipping to customers. How do we account for all this in general as these prices go up, all the different revenues that are owed to the state? And in reality, inflation with a lot of the post-pandemic activity has led to lower revenue, right? It's just eating into the actual profit, that margin that you have. And so how do we kind of tweak different things as states do that as well and become more rigid and less flexible on some of the extensions? How do we wrap our hands around that? And so as the revenue or the windfall for states increases, they want to get out there and take a look at what is actually owed to the state, right? We're the state of California, we're the state of Texas, Florida, Colorado, Washington, some of these complex states and other ones. This is what we expect from your business as far as the tax revenue that should have been collected. what do we actually need to inspect and expect, and what is that amount, and what did we actually get? So when the state revenue dips, it's easy for them to introduce different tactics, different things to keep you on your feet, and just make it complex to where they are getting the money now that's owed to them. And again, it defaults back to, how do we manage that? How do we wrap our hands around it? How do we shift from what we've always done to now getting into a solution that can manage that in real time, and we can focus on other areas of the business? So that's really where that comes in. And so what that does is creates a lot of different triggers, or really kind of that nexus piece to say, now the business has an obligation to actually collect and remit. And so Brian's going to go through some of those different pieces and really kind of what those triggers look like.
Thanks, Cameron. And I would say, a lot of our processes, when we are having, a consultative approach with a new business, they typically start here. And we always like to start our conversations here with Nexus because, as you can see on the screen, out of the 45 states, the thresholds vary state by state. Some of you may have heard that, the majority of states is, based off of, 200 transactions or $100,000 in sales. As yet that is a majority rule that we kind of go by. They vary significantly state by state. And we'll kind of go through some of the different updates, and then obviously, home rule taxes come up a lot. But as I mentioned, as you're keeping this in mind, I would probably say 75 to 80% of our phone calls start with Nexus, where business owners are saying, hey, we're not really sure where our obligations are. And that's where we want to start first, because obviously automation, we're great at, and we can, tap into these ERP systems, but the compliance piece is the most important, making sure that, based off of your sales, the transactions into states, and also about any other activities. Obviously, Wayfair was a big trigger for Avalara and sales tax, but we still, like to Cameron's point earlier, due to the pandemic and all the online sales revenue, we have a lot of people that are reaching out in the past, 2 years, even till now, saying, hey, we really haven't tracked this well, and we want to, one, get an idea so we can sleep better at night, and two, we just want to make sure that we're being compliant. So kind of moving on to, the next slide, where it really explains and walks through, the thresholds by state, like I had mentioned. The majority of states, will look at, 200 transactions or 100,000, as you'll see there in blue. But there's some states that are higher in, gross sales, and then some states that don't even count transactions. And you'll start to see the theme on, like, this next slide that's going to be coming up as well, where basically they vary significantly. And when you kind of think about having to track all of these states and all of these different rules, it's extremely, extremely time consuming. I think that, a majority of businesses, are starting to operate in other states where they're not really sure of those thresholds. And as you'll see on kind of another slide coming up, where, it's based off of taxable sales, non-taxable sales. Are these based off of gross sales? Are they based off of retail sales? And there's just so many, different factors that go into it, where, a lot of businesses turn around and say, hey, one, we need help identifying it, and two, we don't have the time or the staff to track it. So kind of going into the next slide, where,
Hey, Brian.
Yeah.
Hey, Brian. For those folks on the phone that are maybe questioning where they have kind of exposure or how they mitigate that risk, can you just go over our sales task risk assessment, kind of how that plays into this, and just really kind of what that is, and let them know that there is a tool that we can use to highlight that, and then kind of have those discussions of where it's at.
Yeah, absolutely. So again, where we start these conversations, we start a lot of times with a risk assessment. And, we use the free risk assessment, and basically to identify some of the activities of the business, and to determine, what states you're in now and what states you may have cross thresholds. But we have a standard and a premium risk assessment that dig a little bit deeper, very familiar with what a lot of CPA firms do. And what that does is, one, we're collecting the sales data. So like a premium risk assessment, which is probably the most sought out after risk assessment that we do deal with, a premium risk assessment will do a 5-year look back. It will look back 5 years over that data. And that survey once that goes out to the business, and whether it's one or the team that's completing the survey because of the question and material behind it, once that survey is completed, then we schedule a debrief call with the business owner and the team that's involved with any of the sales tax or use tax. And a tax director, one of our tax directors on our team, will really identify which states we've determined that you have created Nexus, or when you crossed Nexus, and they really just advise on what next steps would be, whether it's just, hey, there's not a lot of liability here, let's just register and move forward. They'll give direction as to, hey, we crossed Nexus in this specific state some time ago and there's significant liability. So Avalara has the ability to do voluntary disclosures where we will go to the state on behalf of the business owner and say, they weren't aware that they crossed Nexus. And, with that said, there's a little bit of liability they're looking to pay and move forward and get registered. Can we abate any fines or penalties? And Avalara, being the leader, that is mostly all the time, if not every time, agreed upon, where we get the fines and penalties waived, get everybody registered, get paid what's due, and move forward. And again, sometimes that doesn't happen, but that diagnosis after the risk assessment is, very eye-opening. I would say on average, and I think the statistic is that about 3 to 4 states end up coming up on these risk assessments that business owners were not aware that they did have an obligation to file and remit in that state based off of thresholds that they did cross.
Yeah, I think that's so important. It's such a great tool, especially if we're kind of letting folks get into it at no cost to say, look, here's the health check for all the risk when it comes to these areas of exposure and getting compliant. So such a great conversation starter. I enjoy listening to those stories.
Yeah, and then, very importantly, like I was mentioning before, there's just so many different factors and complexities that go into tracking Nexus. And that's one of the main questions I will start with. Have you done a risk assessment in the past year or two? How are you guys currently tracking Nexus today? Because some states, like I had mentioned, they will track by gross sales. Some use retail sales. Some include marketplace. Some exclude it. And it really becomes cumbersome to business owners having to come up with a system to track all of this. And when starting to sell into, a new state, in the past year or two, or multiple states at a time, and having to research what those thresholds are and identify what you're doing in those states, because it's not just, one formula that you can plug into an Excel sheet. There's a lot of different factors that are involved. And, researching that data, tracking that data can be very, very time consuming. So this is, basically a map that kind of explains those different thresholds. And as you can see, just, from the colors on the map, like, it varies significantly. And as we kind of move on to the next slide, one of the things that, we've been having a lot of conversations around recently is, local, home rule local. A lot of states, for instance, Colorado, trying to ease the burden by urging municipalities, to adopt it at a local level. And if any business owners on the call have ever dealt in Colorado, it's something in our training classes that we use as an exercise. They'll give us, 3 locations and ask us to find the tax rate. And the eye opener and the purpose of the exercise is that, across the street in a certain, town or county in Colorado, the rate can change significantly. And, especially when you're starting to deal with a lot of local taxes, Louisiana, for instance, with all the different parishes, streamlining that process with 64 different tax jurisdictions, like Louisiana and Colorado come up significantly when we are working with different businesses that operate in multiple states, or if it is their home state. There's plenty of businesses that, don't sell into other states, and, they just find even their home state of, Louisiana, Colorado, Pennsylvania, California, Texas, like they just find it too time consuming and still difficult. And again, they don't want to take the risk of, messing with it, for a lack of better words. So a lot of these other states will really enforce as a stream of revenue to the state on a local level for, those taxing authorities to, create, their own types of Nexus requirements. So being aware of which states apply Nexus at the local level is very, very important. And, with that said, we're the experts and we have these, updates real time on any of the local home rules that are set in place, as well as any, different changes in jurisdictions. So back to you, Cameron, on marketplace complexity.
Hey, thank you. So yeah, going through marketplace complexity, just as far as facilitator laws, where does the responsibility really lie to not only collect the revenue for the states, but also to remit it back? And how do we manage that? So if we look about 45 states, including Puerto Rico and even Alaska, have really got into now adopting these marketplace facilitator laws. And so what really are those? Those are laws that allow a marketplace, whether it's through fulfillment by or whatever it may be, really requiring those marketplace facilitators to collect and remit state tax, right? Sales tax. So we invoice somebody, there's a calculation of what the rate should be. We collect tax on that, sales tax on that invoice. After the goods or services are performed, we recognize the revenue. Now we're on the hook for a percentage of that to actually go back to the third party seller or to the states on behalf of the third party seller. So the facilitator, the marketplace facilitator is really on the hook for that, and states are refining these different rules of how do we include other areas, other industries, other places that we deem to be a marketplace. So Brian, I don't know if you want to cut back over to you as far as the registration and return requirements that you see when talking to folks on really kind of the marketplace and the growth within that, or really what is now changing for them.
Yeah, absolutely. And when I said back to you, I realized that was my slide. So thank you. So, same things here with the states having very specific guidelines around the why and the how to file returns for marketplace sales. And again, as you can see kind of with the color mapping, it does vary significantly state by state. We've got some businesses that are required to register and file returns with the state if the seller has inventory in that state. So when we talk to, I won't go kind of off into another topic, but when we talk about something called the streamlined sales tax program, that's basically the people, places, things. One, when we're looking at Nexus or we're looking at registrations, where do you have employees? If you have remote employees, which we've all seen significantly in the past few years, there's an obligation to register in a specific state for having remote employees in a particular state. If it's not the home state, even if it's not a state that you're crossing thresholds in, attending, it's not on here sharing it, but even attending trade shows in specific states, there's a lot of different reasons that you would have to register in a particular state. And then also the returns. Again, certain states will require you to register and file returns within that state based on being an exclusive marketplace seller. And there's a lot of different factors that go into it. And we identify that on our initial or secondary calls when we kind of partner with our, tax experts and tax directors, like I had mentioned before, and really do a debrief and an analysis after those risk assessments are done to really educate and let business owners or the finance team understand, why that obligation is there for that particular business by that particular state. And then, when I kind of think about having to identify and get this information, a lot of businesses are, whether you go to Google and you get 3 or 4, searches back, crossing your fingers which one's the correct one, or, going to, a common problem that I hear with some businesses is, hey, we expanded so significantly over the past 2 or 3 years, and we've always partnered with our local CPA firm, but we're starting to not feel that confident with the fact that our local CPA is not that familiar with these states out west that we really started selling into. Where and when do we have to register? Which returns are we responsible for? Whether it's, economic or physical nexus, and identifying those. So again, we really identify for business owners when we do that risk assessment. And the one thing that I appreciate about Avalara compared to some of the competition out there, I like to look at Avalara's in 3 different components in those evaluation processes. You know, the first part, obviously, we're always looking at the compliance. So we're really looking into, you know, where we can assist with looking into those risk assessments, like I had mentioned, and where your responsibilities and obligations might be. Secondly, is the expertise and the research. We have a whole department which is called Avalara Tax Research, which really is partnering with our tax attorneys on any inquiries, questions, certain particular situations on your business model and how you go to market, and how we're able to, you know, back businesses with the, you know, the law, the documentation, and the proper way to, you know, file, remit, and register in specific states. And then lastly, the automation piece, just to share, because I don't know if there's a slide about it, but even on our homepage has a heat map that truly shares with businesses what your thresholds are, and we're tracking the data and all your sales in the state. So back to you, Cameron.
Yeah, that's great. And you know, it really is like so much to manage when we start to get into these stories and look at where businesses are at and some of the challenges and requirements of just managing all of that, right? And so, in addition to that, what are some of the challenges when it comes to being compliant, and really some of the other noteworthy updates within the tax landscape? I think everyone's aware of the new changes Colorado had that went into effect at the beginning of this month. Really just, again, adding in a small little tweak, a small little fee that really adds up to, okay, gosh, now how do we add this to every single invoice when we collect, as far as goods that are delivered to the Colorado addresses, right? We've been doing business a certain way for so long. Now there's this little fee that comes in for 27 cents on every good that's delivered to a Colorado address. How do we enter that now and make sure we're managing it right? Like, we know how to do it, we know why we're doing it, but how do we actually make sure that we're accounting for every single one? And we're doing it in real time, in addition to the different jurisdictions and tax rates, to get that one rate that needs to be collected and remitted to the state. And so really, that, with Colorado leading that way, again, like Wayfair did, it just really opens the door for other states to add their own different fees and things as well. And as far as cryptocurrency tax payments, it's another thing that Colorado is looking at. It was pretty, it was a thought with Ohio, and I think logistically they couldn't calculate and actually see what was supposed to be remitted to the state of Ohio. But I think Colorado is a little more savvy, and they're starting to get into the cryptocurrency piece, where they will accept those payments and then have a tax on that as well. I live out in California. I feel like everything we have is taxed, and taxes on taxes. And really, here, California was the fourth state, not the first, that required companies to just pay for cleaning up packaging waste. So really, now how do we account for that? We have not only our sales tax, we have exemption certificates for line items that we don't collect tax on and have to prove. Now we have this thing where we have to actually add an item on for package waste that we're sending to folks. And so how do we account for all of these different little fees, these different little items that are on these invoices and that are being calculated and collected, and what do we do with it once we have it? And so that really just amplifies any audit risk, or really, I feel, amplifies the opportunity to really look at the efficiencies and get visibility and gain compliance within that. And how do we start that process with Avalara? How do we do that and go down that path? And so really, from the addition of our traditional brick and mortar to an online presence, now really businesses, and specifically the states, are going back and saying, look, we don't need to have a bunch of field service people that are going to these different businesses and knocking on the door. We're going to join this digital transformation. We're going to now reach out and use different digital platforms to get into businesses and cover more ground faster. And so that COVID has really accelerated the adoption of this by really municipalities or entities that are more laggards when it comes to technology, but really has accelerated during the pandemic. And so really that, again, allows them to cover more ground in less time, and really get to more businesses and knock on the doors virtually and say, hey, we want to see this invoice. There's 30 line items on there. 5 of them should have been exempt. You need to prove that. You calculate a rate of 8.75 for all these items. We think it should have been 9.15. We want you to justify that, not us. It's on the business to come up with that and go through that. So that's really kind of the preparation and understanding that part of it, and where a real-time solution that's in the cloud comes in to do that, and then also have that readily accessible for businesses that need to access that information. And so currently, during the pandemic, states became less rigid and said, okay, we're going to move the filing date from April, we're going to move it to July 1st. We understand everyone's kind of in the storm together, we're all in different boats, but really we understand that we're going to become less rigid, a little more flexible. Really now it's like, okay, our windfall's grown, the amount of what we actually have in revenue from taxes versus what we feel we should have got has grown. We need to get back out there and really boomerang our efforts and reach more people. So how high is the audit risk currently? So if you're in retail, manufacturing, distribution, wholesale, any construction, really these are the main targets for audits. These folks have a lot of moving parts, as you know, a lot of things to be accounted for, just a lot of things to get all moving in the same direction. And auditors know that there is a lot of lack of compliance and questions and lack of efficiency in manual processes. They want to take a look at that and see what's going on. So when they do that, what do they find? And really that's where the oversights come in. There's gaps or holes in the process there. The reporting is not readily available because you don't have a solution that's in the cloud and able to readily pull that invoice or that information. And then just with any certificate management, okay, we're in Texas. This line item has a 20% exemption. We only should have collected 80% of the tax. We need now to pull that exemption certificate, that resale certificate, and justify why we didn't charge 100% and go through that. How do we have those documents and all that readily available? And so that's really what auditors are looking for. There's obviously holes in invoices that don't show sales tax. You'd be surprised at some of the stories that we hear, and how do we go ahead as the business, which the burden is on us, to have the proof of all of the things that we're doing, and then really mitigate or avoid completely any kind of audit fine or penalties or anything that are incurred, right? And so Avalara is here to walk through that with you of how we get compliant up front and stop downstream a lot of the pieces that come with that when we're doing a manual or non-compliant process. So that's kind of some of the audit piece of it, really kind of where we're at as far as the state of or additional tax compliance. What are some of the updates? And really, Brian, back over to you on some of the additional streamlining of those compliance pieces and things like that.
Yeah, absolutely. And as we kind of jump into the next slide, I kind of call it the roadmap. This is kind of, the direction that we start with businesses, like I had mentioned before. First is where. Let's make sure that we're identifying through a risk assessment, where the business has to file and remit, where those responsibilities lie based off of, sales, transactions, gross sales, employees, inventory, whatever it may be. That's where we want to identify, because we use that blueprint for steps 2 through 5. Because when we go into step 2, like I had mentioned, when we do one of those debriefs, that's where we will suggest which states that you need to register in. And then, again, not all states choose to do them all. And, they take the suggestion from our tax director, but Avalara being fully, having a full compliance suite, we will go and do any of the registrations for those businesses, and we do it in a very, very timely manner. And as I had mentioned, our current clients have that heat map where, 6-7 months down the road after coming on board and getting everything implemented, that heat map is identifying for businesses that they've triggered that they're approaching Nexus in another state, that they've crossed Nexus in this particular state. Would you click of a mouse, would you like us to register, but also have a conversation with the tax director first? Obviously, AvaTax is our bread and butter, for lack of better words. That's where the calculations for the correct rates, rules, boundaries, and jurisdictions. One of the most common sentences and phrases that I hear people say is, we're doing it, but we just don't know if we're doing it right. We don't know if we have the rates correct. So if somebody does come, for an audit or knocking on the door, at least we were doing it, but now we're at the point where we want to make sure that it's done right because of, whether it's loss of revenue or just, the time that's going into, miscalculations. More importantly, with exemption certificates is, tracking those exempt sales, being compliant. Some businesses, just from my experiences, some businesses that have been in business for quite some time and they have a long-standing relationship with their customers, they don't collect, and it's very much on the honor system. And then they'll come around and say, hey, we're kind of a little bit nervous now that if we do get audited, and it's kind of, tough to go back to a long-standing customer and start to collect those certificates, or they just aren't able to get them. Some will charge tax to customers if they don't share the exemption certificate. And then that creates the whole practice of, doing credits back once they, that gets their attention to give an exemption certificate because they see the sales tax showed up on an invoice. And then they go back, get the exemption certificate, and all the time having to go back and, credit back the sales tax and all, everything in the accounting system. But, a best practice that I hear from a lot of businesses, not a lot of businesses, but I love this best practice is, and we share this a lot when we're in these conversations of this roadmap, is, if you are a highly exempt, if you are dealing with a lot of highly exempt sales and customers, collect from everyone. Make it a best practice to collect from everyone, because as you grow and you start to register in new states, you're not backpedaling and having to go back and collect on those customers in those specific states, because at that time you weren't collecting it because you weren't registered in that state. But if you are registering later on, you're kind of having to go back and create this project of collecting certificates. And then lastly, just like a payroll company, we have all of the data and we file and remit these returns on your behalf. And it's very automated and streamlined, where you're going in on the 5th of the month, reviewing everything that Avalara has collected and is about to file and remit, and submitting, giving the approval to submit and file and remit on your behalf. And then we have businesses that, after seeing us do it for so long, being with us, that they just set it up as an automatic and can go back and review the reporting. And as we kind of go into the next slide and, really identify, what truly, where we're helping the businesses by automating the sales tax management. Most importantly, when I look at these, it's the time spent on manually calculating. Like I had mentioned, 75% of the calls that we talk about risk assessments and Nexus being the first topic, I'm typically dealing with businesses that are manually calculating and getting up-to-date rate tables and the time that goes into it, and are those rate tables accurate, where Avatax is real time on a daily basis, any changes or updates that are put in the system by a team, that a team is going in and making any of these adjustments. Compliance, just the peace of mind of knowing that you are registered exactly where you need to, and that there's, I hate using the word fear, but there's no fear of an audit and being worried that everything's not correctly calculated, remitted, and registered in the proper states. Another one that I love hearing when we are on calls is the customer experience. I get that a lot. They want it to be easy, they want it to be accurate, and they want it to be very quick for their customers. Especially the collection of exemption certificates. That's a big one that I've heard as a requirement for businesses. Making that process really simple for their customers to upload certificates if they are, exempt from sales tax. And more importantly, as Cameron has touched on a little bit, and we hear a lot on our calls, it's the growth in the past 2 or 3 years with a lot of businesses, especially going on, selling, online during the pandemic. A lot of decisions come down to, and people are very honest to me, Brian, we're deciding if we're going to hire somebody to come in and do this, make it someone else's responsibility at the business, or we're going to outsource. And I truly keep that in mind when I am thinking about, what the cost of an additional employee is, what's the cost of an additional part-time employee, with the job market being, kind of, to go off a little bit off topic, but something else I hear in a lot of conversations is the job market is very, very hot right now, and there's people moving around jobs. And I'm hearing that a lot with a lot of these manufacturing and distribution companies on the finance team. Someone left, someone went somewhere else, and that was the person that was doing it for 2 or 3 years, or they just got trained and set up on, doing the process in the past 6 to 9 months, and they have to start over. So that time to train someone new, and how long is that person going to be at the business, and just the cost of hiring an additional person, where we could truly take all of it's not just the sales tax, it's the certificate process, the compliance piece, the tracking piece. So all that goes into really automating the sales tax management.
Yep.
Oh, sorry, on to the next slide. Sorry, Cameron.
It's all right.
So, kind of the flow of everything. Obviously, we have the correct rates, rules, and boundaries, and we have the pre-built integrations into the ERP system. So we're replacing that native function of the ERP system with all of our rates, rules, and boundaries. So you're pinging the Avalara tax engine for any tax determinations. And with ECM, exemption management, when we have those exemption certificates stored on the system because we map them to your customers, obviously we can identify that person's exempt real time, instantly, and pushing back that zero determination, but keeping that compliance. And then lastly, with the returns, because we're capturing all of this data for you, we're able to file and remit on your behalf in a timely manner, very similar to a payroll company. We keep this up a lot, us consultants like myself on the screen, as I had shared before about the roadmap, we want to be thought of outside of just sales tax. There's a lot of different areas of the business, different roles at the business that we can help. And this is kind of, a good visual that I keep up on my calls, because I want to make sure that I am covering all areas, whether it be, manually calculating taxes and really digging deep on how we can plug into the ERP system, or any types of shopping carts or connectors that we need to, whether it be, Amazon sales, Walmart, etc. We really identify how we can tap into all of these calculations to collect the data and handle the returns on behalf of the business owner. And we're speaking of documents, like I had mentioned, the exemption certificates, and really streamlining that. And there's two parts to our exemption certificates: not only the tool that stores them and maps them to your customers, but more importantly, we have something called managed services, where I'm currently dealing with two businesses that they don't even have 50% of the certificates that they should have collected. And they're looking to Avalara's team, which is called Managed Services, to go out and do campaigns to collect all new certificates for their existing customers, but more importantly, the missing ones. Licenses and permits, able to help new locations that are starting out, people with multiple locations operating in multiple different states, where some of the states or local authorities expect and have requirements for different licenses and permits. We have a whole software that is basically designed for organizing those, and also keeping businesses up to date on which licenses and permits they need. And when I spoke earlier about like tax research, Avalara tax research is truly that guidance, support, and direction for businesses outside of just the automation and compliance piece, for particular scenarios and inquiries, scoping projects, etc. So I worked for ADP for many of years, and we used to call it Beyond Payroll. When you think of a payroll company that does workers' comp, 401k, group health benefits, I related 100% to Avalara basically being the ADP of sales tax, where we offer these different services outside of just the sales tax. And to the next slide. And as I mentioned, the sales tax risk assessment, I obviously can share with anyone the free risk assessment. We encourage taking that free risk assessment just to get an idea. And with that said, if it identifies a few things, some businesses like to take it a little bit further and really dig into that assessment, where we're really looking at some of the the consultative approach with a tax director. So really going through state by state why Nexus was triggered, why on that survey that a particular state came up that we need to address some type of compliance concern, and really having that one-on-one with a tax director and digging deep into it. And there's obviously a premium risk assessment that will go back years, because of businesses not kind of tracking for quite some time. Next slide.
That's great. And Brian, that's such a great tool. And I think you touched on something very important a few slides back of, when you talk to folks, they have a process in place, but is that process complete, right? And I think that's you don't know what you don't know. And, it doesn't cost anything to have a conversation with Avalara and just kind of give an update of where your business is at and what we're concerned about. And then really actually putting a tool to say, okay, here's what we thought it was, and here's what it actually was. And so that's why I like that risk assessment so good. And even the light version, and especially the deep dive to say, okay, here's really the nitty gritty of it. So appreciate you going through that. Brian, I did see a few things come through the chat as far as questions. Courtney, did we have questions from the folks on the line?
Yes, so we do have some questions. So thank you both for leading us through a great presentation. And now we're going to open it up for Q&A. So if you haven't submitted a question yet and you have one, you can go ahead and put that in the questions section of your GoToWebinar, and we will have Cameron and Brian answer your questions. And this is a great opportunity because we have two tax experts here. So while we're letting anyone else get any questions they have in, we'll go ahead and start with the ones that came in throughout the webinar. So our first question is going to be, how difficult is it for automation to be implemented and set up?
Cameron, you cool if I take it?
Yes, absolutely. I know you're close to it.
Yeah, so, as I kind of shared once or twice in the slide, and Cameron said it too, it costs nothing to have an initial conversation. So just to walk you through kind of what the evaluation process looks like and not to go too deep into the weeds, the initial call, I like to call them coffee dates. I'm kind of understanding a little bit about the business. It's not every day that you wake up and you want to have a conversation about sales tax. There's a need, there's a challenge, there's an initiative at the business. 30-minute phone call of me just identifying, where you want to focus and look at. And again, to the point of the question, it could just be, we're just looking to automate. We don't want, we don't need to look into certificates. We don't need to look into tax research. We're very familiar with Nexus. So I'm just trying to identify on that initial call. Typically, there's always another call involved before we kind of go to what investment options would look like. And the reason being is I really am looking to provide value. I'm just a consultant. So when we are talking about risk assessments, I'll get one of those tax directors involved. When we're talking about, complexities with, let's say, construction or use tax, I'll get our Avalara tax research on the team on a call to really kind of dig in a little bit deeper. And, I always ask to come to the call with 2 or 3 questions about, some inquiries that you've never felt confident about the answers you've gotten. And, business license management. So I will try to go to another call if there is a need there so that you really have, some more perspective from someone else at Avalara. And then once we kind of discuss investment options, it's not one size fits all. Most of the investment options, I always come up with 3 different types of packages, good, better, best, to see what's a good fit for the business and obviously a fit for the budget. Once there's an agreed upon, everything looks good, everything looks attractive to the business owner, and they want to move forward with the automation piece from the day that we, kind of assign an agreement to move forward. And it's just a yearly agreement. There's no 2-3 year contracts, whatever it may be. 30 days from that agreement being signed is when our implementation team, with partnering with SWK, within that 30-day time frame, will set up a kickoff call. We're really looking at the implementation time frames, and based on the scope of the project, they're amazing at implementation, and they're one of our partners that handles the implementation and takes the lead on the implementation. And I would say that it's fairly probably a 2 to 3 month process. And the best way for me to explain how that time can be dragged out or it can happen sooner, it all depends on the priority of the business. How many projects are going on at the business? Is this one of the top projects that needs to be done? Because on Avalara's side, our typical time frame is 3 months, but we see people get it done in a little over 2 months, meaning from start of kickoff call to everything implemented, up and running, charging tax and having the returns and registration set up. We've seen it done in a 2-month time frame from that kickoff because it was a priority for the business.
Yep.
Hope that kind of helped really explain kind of what the cycle looks like.
Yeah, agree. And especially for Sage or Sage Intacct folks, with Avalara being a cloud-based solution, it's something that we want to get going and get implemented and go live as quickly as we can. So excellent.
And one to add real quick, sorry, Cameron. When we talk about risk assessments and doing, not a risk assessment, a free risk assessment, those risk assessments can be turned around fairly quickly. Again, if it's a priority to get the sales tax data and fill out those different questions where we're asking about the different business activities of a business, I would typically say that after it's completed and returned back to Avalara for us to do the debrief, those are usually scheduled within 3 to 5 days with a tax director, that we're basically going over our findings on that call. So the evaluation process, I wouldn't want anybody, I always share, I don't want anybody to think this is a long, dragged out process. You're talking about 2 or 3 phone calls before we're talking about next steps with automation.
Great. Appreciate that. Courtney, were there any others?
Yep, there's a few more, and thank you. That was a very, kind of full view of implementation and options. So our second question is, when you hit an economic threshold, are you automatically registered in that state?
I got it, Cameron.
Okay, yeah.
Or you could chime in too. So when you do reach, so if you're saying a client of Avalara and you reach economic nexus in a particular state, does Avalara automatically register you? That's how I'm hearing the question. If not, chime in on the chat. But as I had mentioned, that heat map is really tracking. Let's say hypothetically business comes to us and says, hey, right now we're filing in California, Texas, and Florida. And we set them up on California, Texas, and Florida. That heat map, we're still tracking all of your transactions in all other states. And that heat map will light up, letting you know when you're approaching threshold in another state. So let's call it Georgia. And then when you've crossed the threshold, whether it's dollars or transactions in that particular state or whatever their thresholds are, we don't instantly register you because we want you to understand. And also sometimes businesses don't choose to register when we identify that for their own particular reasons. I'll give a real short example. I work with a company that does frames around mirrors, wooden frames, like very fancy frames. And with that said, in his business model, they do dollar samples of those frames for business, for customers to take a look at what type of wood and texture, whatever, color, whatever it may be. And you've got some people that are like, oh, I'll take 20 or 30 to look at. I mean, he's triggering Nexus unbelievably in all these states because of these dollar samples, but that's kind of a hard one to make the decision to go register in that state. So, we got on a call talking to a tax director. No, it's a very one-off scenario, but we want to make sure you understand why you triggered Nexus and getting your, approval, for lack of better words, to go register you into that state. So, we really identify it for you. I hope that was the question with regards to, automatically getting registered if you're a client, because outside of not being a client, no, you wouldn't be ready. I mean, that's on a business owner to track Nexus in every individual state and to take it upon themselves to register.
Yep, and I think the dashboard within Avatax shows very visually kind of the movement of that and as you know, the heat map and things like that. So Courtney, I know we're getting against our time and we may have to kind of reach out to folks direct. Do we have maybe one more question we can address before we adjourn?
Yep, I think we'll hit one more question and then we'll close out the webinar for today. So our last question is going to be, for exemption certificates, should I just have a database for my certificates that I can reference, or should I link them to each transaction? So I assume this would be from a customer's perspective.
Yeah, probably. Yeah, I'll let you take that last one, Brian, so you can hit all 3.
Absolutely. So outside of Avatax is the tax determination, that's the tax engine. And then when we talk about ECM Pro, which is the exemption certificate management tool, that tool will basically, you have 2 options. One, let's say you move forward for tax and certificate management. We will basically share with a business owner how to map those certificates directly to those customers. So we upload your customer data And then we show you where to, basically take a PDF and attach it to that customer's file, so that every time a transaction happens, it's identifying that that business is exempt. Our managed services, when we're dealing with businesses that have upside, and again, it doesn't really matter. It's more preference than the volume of certificates. But when I'm starting to deal with businesses that have more than 300, 500, 1,000 exempt customers, that's a lot of workload on top of the implementation for these businesses to start scanning and mapping it to the customers. Where managed services, I share with new prospective clients, that team will literally take out the staples, pull out the paper clips, send everything to us in a box, and we digitize everything and we map it to all the customers. So in this case, every time that transaction does happen, it is basically pinging the tax engine and noticing that that customer is tax exempt, and then bringing back that tax determination of 0 to that particular invoice and line item.
That's awesome. That's great.
Okay. Well, thanks to both of you. I think that's going to conclude our Q&A. And if you have any more questions, you can reach out to your customer account manager and they will connect you with Brian or Cameron or, another person at Avalara to, get your questions answered and get you more information. And thank you, Brian and Cameron, for a great presentation and for taking the time to be here with us today. And I'd like to also thank everyone in the audience for attending this webinar, and pending anything else for Brian and Cameron, we hope you have a wonderful day.
Thank you so much,
Thank you,
everyone. Appreciate it, Courtney.
Thank you.